Hi there, Serial Trader here. Let's have a look at the major US indices heading into this coming week. And we'll start off with the wave chart here on SPX. So since the last video, we certainly got the bounce that appeared due, relieving the oversold conditions that we had on multiple time frames. You know, the daily, the 4-hour, the 1-hour chart. They all got, into deep oversold conditions, and now it's worked off that condition. So at this point, we are having some sort of wave 4 corrective rally, but the question is a wave 4 of what degree? And currently I'm just working this fairly small degree wave 4 interpretation, minute wave 4, as I have it labeled. So, we have our larger, intermediate wave 1 down, or A, although I'm definitely favoring 1. Now we have intermediate wave 2 or B up, okay? And now we're working our overall larger intermediate wave 3 down, okay? And then within that intermediate wave 3 down, we have this initial 1, 2, and then I had a 1, 2, and then we had a third of a third, and that certainly had all the characteristics of a third of a third, being so quick and violent to the downside. And now we've had a sharp bounce up, which I'm currently just labeling as this minute wave 4. Notice we have not actually had overlap with minute wave 1 or minor wave 1 of intermediate wave 3 as I have it labeled here. So currently, it's still, absolutely acceptable to consider this just this very small degree minute wave 4. And if this is the correct interpretation, then we should soon resume a decline in minute wave 5 to complete minor wave 3, and then we'll, look for a larger minor wave 4 rally. So that's kind of how I'm currently working this. Now, just to zoom out here a bit, this yellow line down here, if I really zoom out, let me scale this properly. If I really zoom out, this yellow line we have, that's the uptrend line we have dating back all the way from our 2009 low, and that's just connecting these two major corrective bottoms and projecting them out into the future. And we actually got fairly close to it on the most recent move down. Didn't quite come to it. Perhaps we'll come and touch it here on minute wave 5 if that's how it's going to play out, and then we'll bounce off there again. But at this point, definitely looking for at least a short-term resumption of the downtrend here before looking for maybe a larger bounce, a larger degree, corrective rally to the upside. Now, I'm actually just going to go ahead and get rid of this or A or B, because right now everything's suggesting that it's a 1, 2, 3 in progress. So I'll leave that in play for now. Okay, so on the shorter term, just to show the subdivisions here. So shorter term, we have our 1 down, 2 up, then another 1, 2, and then this is the third of a third wave that completed here at the low of 23.46.58. Okay, now so far we have a very, very ideal looking ABC zigzag up, and you'll notice I've done a couple of Fibonacci retracements. So of this overall minute wave 3 down, we came and basically just hit the 50% retracement level, which would be certainly fairly typical for a wave 4. Next in line, if we don't have a pivot there, is the 618 retracement, which is still below having a 4-1 overlap. So that overlap would take place. This short-term wave count would not need to change unless we overlap here, and that level would be at 25.83.23. So anything below that, and this can still be considered minute wave 4, and then obviously anticipating the resumption in minute wave 5 down. Now we also have AC equality right here at 25.19.12, which lined up quite nicely with that 50% retracement. So you can see we got right there, and then basically started reversing nicely off of that near the end of the day on Friday there. So it looks promising that we just have a simple ABC up, minute wave 4, and we're going to roll over here, but we have to see a little more confirmation before getting too confident that this is the correct path that the market is taking. But so far looking fairly good. Now let's go to the I think there's some candlestick chart. So more reasons to believe we may have a nice pivot. And looking at this, so we got very extended to the downside. Obviously, you know, some sort of bounce was due. I mean, we just went down, 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 just relentlessly. Yes, we finally got the bounce. But look, we basically just came up here, had a 2-day bounce, basically, and then we weren't able to close, you know, significantly above the T line. We basically closed at the T line. We also did a doji star here on Friday, so that's a potential reversal signal. We also, okay, so you see this channel I've drawn. So that's the base channel from the all-time high. Connecting, you know, the wave 1 extreme with the wave 2 termination point in parallel off of the wave 1 origin. And you see we broke down nicely out of that. And then we've only come up now just to find resistance, it seems, at the bottom of the channel that was formerly support. So there's that. We have the doji. We have the short-term Elliott wave zigzag up. We have the 50% retracement and the equality between A and C. All these things are lining up saying that, you know, we may have a good pivot here as of Friday's high, which was at 25.20.27. So potential reversal here, daily doji star, and looking for a resumption, at least on a short-term basis, to finish, you know, the sequence down. Now, if we look at the, well, I suppose before I go too far into the analysis, so I got rid of the March 290 SPY puts. They did extremely well. I closed them when we got really beat up there on Christmas Eve. And now that the bounce has played out, on Friday I reestablished, I guess we'll just call it a starter position. I bought 10 SPY put contracts, 260 strike, March monthlies for the expiration. So, you know, March 2019. So that's what I currently have working. Not a large position, but just a starter position. I may add to it if we can start getting some confirmation of the downside. But the way the markets are moving, even just a starter position can be, you know, pretty profitable once she gets going. Okay, so that's the current position I have. And of course, just playing the futures on a more shorter term basis. But I'm in and out of those so quickly, there's no point even discussing it other than for a, you know, a scalping video, which I haven't made recently. So that being said, so the daily, we've had a look at that. Now let's look at the weekly, now that we finished the week. And weekly, so we had, you know, further downside, made a new intra-week low. We bounced off the 200-week simple moving average, so obviously some sort of reaction off of there, at least for now. Although I don't expect that to hold on a longer-term basis. And other than that, nothing really going on the weekly. Just continuing our downtrend, well below the weekly T-line and still close below the weekly 3 T-line. So the trend is still decidedly pointed down here. And I'll do the monthly. After we have New Year's Eve, things will be closed on New Year's Day. So on New Year's Day, I'll do kind of a end of the month, end of the year video along with everything else that I normally do. So we'll look at the monthly candle and the yearly candle and all that. But yeah, just still well in this death cross. 50 trending well below the 200, and they're both pointing down. So everything as far as moving averages, certainly in bearish alignment here. Okay, that's SPX. Now we'll go to the Dow Jones Industrial Average. And the Dow broke down quite nicely out of this base channel. Got fairly close to its 1.618 relationship, which would be between 1 and 3. So it got quite close to it. And that would have been at 21,400 or so. Went as low as 21,713. Now the Dow basically had a corrective rally along with SPX. Of course, they are basically trending more or less in tandem. But you see, we just came up basically to find so far finding some resistance on the bottom of this base channel that acted as support formerly. So perfectly normal to see come back and test that former support channel is now possibly a resistance line. And you can see we did basically doji reversal candlestick potentially, basically closing at the T line. So the Dow looks vulnerable to another leg down here on a short-term basis as well. We'll look at the weekly. And the weekly picture here is essentially the same as SPX. Still well below the weekly T line and the weekly 3T line. So not much difference there. Okay, we'll head over to the NASDAQ composite. So on the NASDAQ composite, basically a similar story here. We actually got a little bit past the equality relationship between what we'll call 1 down and our 3 in progress. So the NASDAQ, as far as the actual amount of price movement, so far has had the weakest third leg down compared to its first leg down of the 3 indices. But if we get another wave down on the smaller time frames here, that'll certainly change, and we might get closer to that 1.618 relationship to the downside. But so far, basically bouncing off that equality relationship, roughly a little below it, but roughly the equality relationship. And now we basically went up to the T line, did a doji, so a potential reversal here on the NASDAQ composite at the T line. So very much the same as the other indices in that regard. And everything else in bearish alignment, of course, with the moving averages. On the weekly here on the NASDAQ, anything remarkable here? Not really. This could have been a piercing candlestick, but it didn't actually close high enough to be that. It would have to close, halfway back into this real body or more, and it did not do that. So not a piercing candlestick, which would be a bullish, potential bullish signal. Not a valid one. Didn't go high enough. Didn't close high enough, I should say. And well below the weekly 3T line and T line. So everything in bearish alignment here as well on the weekly. So really every chart as far as the major indices looking more or less the same here, other than some subtle differences, but the general trend is certainly the same. Okay, now on the VIX. On the VIX, we made new highs, of course. Got into the high 30s, went as high as 36.2 on the VIX. So well beyond the VIX highs that we made in October there, which is at least on VIX's perspective, confirmation that this is a stronger third wave to the downside. And now VIX has pulled back a little. But if we have another leg down here soon on the indices, we should see VIX do another leg up and potentially, get into the 40s or so. We'll see. Now, speaking of VIX, we'll go to the VIX VVIX tool and see what we're looking at there. So here I did highlight, and let me just highlight this. Duplicate. Do another one. Rectangle. Okay, right here. So here, first we had a VIX VVIX divergence. So you see VIX was making new highs quite strongly, while VVIX basically just did a double top at the same time. And then VVIX started dropping, got below its moving average here. So that was step one of the signal. But we had to wait for SPX to actually get above its blue moving average. And you see that once SPX did that, that was a confirmed buy signal with this tool. And you basically went from 24.40 or so when that signal activated. So far you've gone as high as 25.20. So roughly an 80-point move to the upside after the buy signal is activated here. So again, another example of the usefulness of this tool. Now at this point, obviously, the next thing to look for would be another VIX VVIX divergence, which we don't have yet. They're both making new lows at the moment. But once we start having some divergence there, and once VVIX gets back above its red moving average, we'd look for SPX to confirm, get below its blue moving average, and then that'd be another confirmed sell signal with this tool. So for now, it's on a buy signal, but obviously based on all the other analysis, certainly looking for another pivot, another downside, at least small degree wave, pretty soon here. Okay, so there's that. Now, before I end the video, anything else to say? Yeah, so basically the real question here is, okay, we've got a wave 4 rally. I'm currently, anticipating that it's just a small degree wave 4 and we're going to come down again soon. But if it's not, and there, I could certainly count this differently. This is currently my preferred count, just because it looks proportional and the waves kind of match one another in magnitude and in time consumed. But there is a way to count this. It's not pretty, but there'd be a way to count this where we do have an overall completed wave 3, okay? And if that was the case, and we had this larger wave 3 already in place, then we'd be looking for a much larger wave 4 rally that would have to still fail below the wave 1 level over here, which was at 2603.54. So you basically would have to have a rally that couldn't get above 2600 or so for not to be 4-1 overlap. Otherwise, that would have to change this overall wave count to something else. So that's something to be aware of. If we do actually have this larger intermediate wave 4 rally beginning, then it may not be done yet. Although even on a, even if that's the case on a shorter term basis, looks like we're still going to be looking for some weakness soon. So just to be aware of that. Although I'm certainly currently expecting that this is just a smaller degree fourth wave rally that's possibly already complete, or nearly so. So that's what we'll be looking for tomorrow. I'm not sure how much movement we'll get. It's just a pre-holiday session once again, and then of course the market's closed on Tuesday for New Year's Day, so we'll have to see how it all plays out. But yeah, we'll check in again sometime on New Year's when I get a chance. All right, Serial Trader signing off.